point number 1, last week on Monday, S&P 500 gave a flat open and after open, it moved up. This was my previous S&P 500 weekly technical analysis and it was 100% confirmed that either there will be a gap up open or irrespective of any open, there will be an initial bullish movement on Monday. Now the point number 2 is that the all-time high of the S&P 500 was 5048.39. This was my first update to my Patreon community members on Monday, February 12th. And I mentioned that in the best case scenario, the S&P 500 can move up to at most 5048. And you can see the all-time high of the S&P 500 is 5048 only. And if you are thinking that it was only on Monday, these are accurate predictions on Monday, then no. This was Tuesday, February 13th, the CPI data was published and the CPI data was worse than expected. Now, because of this, the worse than expected CPI data, we have seen a heavy gap down open. S&P 500 came down and the low of the candle was 4920.31. This was my pre-market update to my Patreon community members on February 13th. And in the point number 7.c, I mentioned that if the S&P 500 loses this level, then no matter what, the S&P 500 will be able to sustain at 4921 level. And this will be this is expected to be the low of the day. And see, 4920.31 and my number was 4921. So it's not just about Monday or Tuesday. Every day, the movement of the S&P 500 is in between the defined limits. And there are certain conditions. If those conditions are fulfilled, then only the S&P 500 can give an exceptional movement. Otherwise, for the entire day, for the entire time, the S&P 500 remains in that particular condition. Now guys, I am going to discuss the agenda of this S&P 500 weekly technical analysis. The first point of the agenda is the S&P 500 technical analysis on the weekly chart. So there is a bad news for the stock market, for the entire stock market. And this bad news is because of the weekly chart of the Dow Jones. Okay. I will show you that why this is a bad news and what will be the impact of this particularly through the weekly chart. One more thing, that the S&P 500 and the Dow Jones on the weekly chart are still heavily overbought and heavily saturated. Okay. Now, so weekly chart is the big picture. Okay, for a month, for a quarter or so. Second point of the agenda is the S&P 500 technical analysis on the daily chart. Daily chart means that what is going to happen within a week or within 2 weeks or so, what the technicals are saying and what has changed, what is going to change, right? And other than that, on the daily chart, again, the same thing. The Dow Jones on Thursday, it managed to close above 38,700. But on Friday, it failed to give the second consecutive closing above 38,700. Okay. So I will discuss this thing in detail. And also I will analyze the technicals of the Dow Jones and the S&P 500. And guys, remember, this is the technical analysis of the S&P 500. But we are considering the Dow Jones as a reference only. So our 90% focus is on S&P 500 only. The third and the last point of the agenda is the probable movement of the S&P 500 from February 20th, which is Tuesday, to February 23rd, that will be Friday. Whatever is going to happen in the S&P 500 in the next week from Tuesday to Friday, I am going to discuss in this the last point of the agenda. Just like what I have discussed in this, the previous S&P 500 weekly technical analysis, the conditions, the movement, the numbers, etc. That will be there in the last point of the agenda. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you are looking for the daily and the precise updates of the S&P 500 from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And this is the weekly chart. And weekly chart means that the one candle represents 1 week, not 1 day or 1 hour. Now, on the weekly chart, first the candle. This is a hammer, clearly a hammer, and this will be considered as a bullish hammer but with a bearish head. What it indicates? This indicates the bullish sentiments in the market but in a restricted manner. Means that if there comes any more bullish movement, then that is expected to be restricted or limited. Rather, we are going to see some softening in the market. And generally, whenever this kind of candle is seen, or whenever this kind of candle comes into the picture, then this candle, it indicates the reversal of the trend or the reversal of whatever was there. If the head would have been green, then this means the continuation of the bullish trend as usual. Okay, but in this case, this is saying some reversal in the market, right? Now, so this was with the S&P 500. Now, important point is in the Dow Jones. Notice this particular thing. The closing of this particular week, this is the weekly candle of the Dow Jones, was 38,654. 38,654. The closing of this weekly candle was at 38,671. The closing of the last candle is 38,628. What is common in these three weekly closings? The common thing is that all of these closings are below 38,700 mark. What is 38,700? This is the heavy resistance level for the Dow Jones. Very, very heavy resistance level for the Dow Jones. Now, because there are these three closings back to back on the weekly chart below 38,700, this means clearly the market is struggling to move up, and the bullish sentiments are still there, but at the same time there is fear in the market, or there are some bearish sentiments in the market. This means that any more, and one more thing, this will be considered as a rejection. Three continuous rejections weekly, on the weekly basis. Okay, this means that any more bullish movement should be limited or is expected to be limited, and at the same time we can expect some bearish movement, some decline in the market. Now, whether there will be a fall or the bullish movement or to what level it will be, everything will be clear on 21st of February. What is so special about 21st of February? On 21st of February, NVIDIA is going to post its earnings. But because the earnings will be posted after the market is closed, this means that its real impact will be seen on 22nd of February. 22nd of February will be Thursday, right? But we will see some movement, some sudden up and down on 21st. Now, there is one more thing about 21st. On 21st, the FOMC minutes of the meetings will be published. Other than that, this time I think projections will also be released. This means that technically we are saying there will be a restricted upward movement, restricted or very limited bullish movement. Rather, there will be more movement in the bearish side. Okay, but there are some conditions. Now, only and only if the NVIDIA posts better than expected earnings, okay, or if the FOMC minutes or the projections comes in line with the expectations of the Wall Street, in that case, this condition, it might not be able to restrict the upward movement and more bullish movement may come. Okay, but again, remember, more bullish movement is subjective to NVIDIA, earnings of NVIDIA and the FOMC projections and the minutes. That's it, nothing else. Technically, no. Technically, it is clear that no more bullish movement, or sorry, any more bullish movement will be or should be limited, right? Now, let's see what the technicals are saying. So, technically, if you notice, the moving average is clear fan out, Bollinger Bands, and there's the Chimoku cloud. Everything is good, everything is bullish, and MACD is still very much bullish. A stochastic RSI, because it is trading above 90, it is also bullish. Okay, other than everything is good. Okay, this indicates that on the weekly chart the S&P 500 is 100% bullish, but at the same time it is overbought or heavily overbought as well as heavily saturated. Now let's see what is happening in the Dow Jones. In the Dow Jones, same, exactly the same, but Dow Jones looks what we say more in terms of overbought and saturated. Other than that, 100% bullish, absolute bullish. So this means that only on 21st and 22nd we will come to know what is going to happen. If the entire stock market fails to get any more bullish movement on 21st or 22nd, then there will not be any more bullish movement, rather there will be a decline. If the stock market sustains and gets bullish movement, in that case it will move further up towards 5100 or so. Now guys, I have one more information to share with you, that there is the program, stock market knowledge transfer program, or the S&P 500 knowledge transfer program. And through this program I teach the movement hacks, strategies, trend analysis, manipulation, technicals, predictions, support and resistance levels, and much more. And the motto of the program is to make you self-reliant, right? And this is my email address, and also this program is delivered one-on-one basis. And this is the Google spreadsheet. In this Google spreadsheet, all of the details are there, that what I'm going to cover, what I'm going to teach, each and everything. But the primary thing is to predict the trend or predict the movement even before it happens. Okay, other than that, there are some intraday hacks, short-term hacks, long-term hacks, and the calculations of the options, live there's a live calculations, options, everything, and the strategies. And this is my email address, and these are the terms and conditions, very simple for this the program, and these are the snapshots of the recent meetings. And again, this is my email address. Whenever you want to participate in this the program, whenever you want to become self-reliant, to learn more, then you can simply drop me an email, and I've given this the email in the description of the video and also in the comment section. Now guys, I'm going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Daily chart means one candle represents one day, not 1 hour or 1 week. One candle means one day. If you notice this, the last candle which was formed on February 16, Friday, it's a heavy bearish candle. Okay, not as heavy, okay, like this, but it is just a good or heavy bearish candle, indicating that there were bearish sentiments on Friday at the time of closing. However, this does not confirm any gap down open. Okay, last week we were sure, 100% sure, that there will be a gap up open, or irrespective of any open it will move up initially, and it did, but this time it is not sure. Okay, now the daily candle of the Dow Jones. If you notice, this is the last candle of the Dow Jones. This is a normal bearish candle, but the candle before this candle is a heavy bullish candle, very heavy bullish candle. Okay, that is why we are going to call it as, or consider it as, a normal bearish candle. This indicates that there were some bearish sentiments at the time of closing on Friday, but these bearish sentiments are not heavy. Okay, so this means that the trend is bullish, it will remain bullish. Okay, but there were some bearish sentiments at the time of closing. Similarly, the thing is here. Now let's talk about the technicals. In terms of the technicals, again the same picture, the same thing. S&P 500, okay, clear fan out, moving averages, Bollinger Band, Ichimoku cloud, bullish. Now this is very interesting, and I'm going to cover this in the next part, probable movement. Okay, very interesting thing in the MACD. So what happened is that MACD turned bearish on this particular day, right? Then on Thursday there came a sudden and heavy bullish movement out of nowhere. It forced the MACD to change to bullish. Then on Friday, a bearish candle, it forced the MACD to change to bearish. Okay, so I will explain in detail that now how this is going to impact the movement of the stock market. Anyways, as of now MACD is bearish and the stochastic RSI is flat. okay, or so. So we will consider this that there are, or the S&P 500 is 70% bullish on the daily chart. In terms of the, now in case of the Dow Jones, again the same Bollinger Bands, moving averages, everything is same. Now in case of the Dow Jones, MACD is already bearish. Okay, this is so this is the big point. This is the big thing. MACD is bearish. Stochastic RSI, it changed to bullish and it is still bullish. Okay, this means that the Dow Jones is or it will be considered 75% bullish on the daily chart. Now remember, the Dow Jones and the S&P 500, they were 100% bullish on the weekly chart. Okay, but on the daily chart, approximately 70 or 75% bullish. This indicates that overall, the S&P 500 and the Dow Jones and the entire US stock market is 85% bullish and still in the bullish trend. Clear? Okay, on the weekly chart, saturated, overbought. That is also clear. And this is the same thing that I have mentioned to my Patreon community members. Okay, on Friday also, that technically the S&P 500 is now 80% bullish and is heavily overbought and heavily saturated, right? And guys, it's not just about these, the daily and the precise updates of the S&P 500 from Monday through Friday, but also the stock market opportunities that I give to my Patreon community members, minimum 5 to 10 every week, right, in the premium stocks of the US stock market. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And on my Patreon page, you will see that there are these the two tiers. As such, there is no difference between these two tiers. The only difference is the geographical location. Okay, so this is the daily S&P 500 updates and analysis for non-US and Canada residents. This is the daily S&P 500 updates and analysis for US and Canada residents. So when you subscribe to either of these, then you will get the daily S&P 500 analysis, updates and the probable movement every day from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many days, weeks, months, more than a year or so, and they are getting these the daily and the precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. And they are very well aware of the things which are about to happen or which are going to happen in the stock market. So guys, whenever you want to join my Patreon community, I have given the link in the description of the video and also in the comment section. You can follow that link and you are welcome. Now guys, I am going to discuss the third and the last point of the agenda of this S&P 500 weekly technical analysis. And in this, the last point of the agenda, I will give you the probable movement of the S&P 500 from February 20th, which is Tuesday, to February 23rd, that will be Friday. So whatever is going to happen in the S&P 500 from February 20th to February 23rd, I am going to discuss here. Now, first a few things. Number one, Tuesday, because February 20th, there is nothing, it's blank. Okay, February 20th, no specific data, nothing. Yes, there was some recent bad news, CPI data, PPI data, okay, back to back, extremely bad data, means for the stock market, extremely bad news for the stock market. Other than that, the recession and all, okay, other than that, the overbought and the saturated condition. So all of these factors are against the market, but still the stock market is holding, okay, because of some manipulation and extreme FOMOing. The market, we have seen, or we have read about this, that the market was expecting the first rate cut in March, and now it is in May, and now it is not even in May. Now the market is also expecting the rate cut in June. So this entire rally that we have seen here, this entire rally was based on the fact that the first rate cut will be in the month of March. Okay, but now nothing is there in the March, nothing is there in the May, but still the bullish rally is continuing. Okay, so this was just what we can say. Okay, it was just a news just to convince the other that see this is going to happen, that is going to happen. Okay, anyways, we do not control the market, we do not control the news. Okay, so we do not know, okay, what the market movers, okay, they have planned or they are thinking. So as such, but yes, what we know is that as of now, okay, the stock market is not considering any bad news. This is what we can clearly see. As of now, stock market is not considering, and it is not just about bad news, it is about the worst news. Market is not considering the bad news, market is not considering the worst news. Okay, it is moving up. Intraday it gives some movement, then again it realigns. Okay, so this is extremely bullish, okay, market that we can say. However, this extremely bullish market is sustaining only on FOMOing and speculation. There is no fundamental base, and there is nothing that can hold the market if it comes down. Something like 2020, okay, February or March, when we have seen back to back heavy, that was because the stock market was moving up against the fundamentals and through extremely this the FOMOing and speculation. That, okay, that was the thing. The second point is 21st. February 21st is Wednesday. On Wednesday, FOMC minutes of the meetings as well as the projections, the SEPs, okay, will be released. On February 21st, it will be very, very much clear whether the CPI data should be considered, PPI data should be considered or not. Okay, through the projections and the comments of the committee members. Now 21st is gone. Now comes point number 3, 22nd. 22nd, okay, because evening on the evening of 21st, NVDA will post its earnings. Okay, and as such, okay, usually or earlier, okay, there was NVIDIA was not in the picture, but now the NVIDIA, this is the heavy bullish rally, okay, AI thing, NVIDIA, Microsoft, okay, everything is there. That is why now NVIDIA, the earnings of NVIDIA will be considerable, because if NVIDIA posts better than expected earnings revenue, in that case this will give boost to the entire stock market. However, if the NVIDIA posts the earnings, okay, which are not as per the expectations of the Wall Street, or if something is not good, in that case there's the hype or this speculation was, okay, whatever was there, okay, then this will be tested and we can expect some good or some heavy decline, because as of now the NVIDIA is more than 700, more than its base price. What was its base price? Okay, that means all of the analysts and everyone was expecting it to be around 500 to 550. Okay, this is the base price, or this is technically the price for the NVIDIA, but it is trading around 750. Okay, so it is way beyond the base or this the holding price. This means if it gives up, then it will be coming down to 500, 550, this particular zone. Okay, so it will lose a lot, and also the S&P 500 and the Nasdaq, they will also lose. Now let's talk about the movement, the technical movement and the levels. Technical movement, at first this is very much clear, 5,000. Okay, S&P 500 will not go down, will not go bearish as long as it is sustaining at 5,000. There is very strong support just near to 5,000 in the 49xx levels. Okay, so we can say a little zone, okay, 5,000 and this particular, okay, heavy support. As long as S&P 500 is sustaining here, it will not go down no matter what. Even if the S&P 500 breaches the mark, but it retraces and comes back above 5,000, then also it will be considered, or it will be seen as sustained movement. Whether it will be able to move up or not, okay, so that's a different thing, or that's a different condition. Okay, now if it sustains here, now comes the high of this, the candle. The all-time high of the candle was 5048.39. Okay, this is the all-time high of the S&P 500. This is not just the all-time high of the S&P 500, but this is also my calculated resistance level. And this is what I mentioned in the beginning of the video, that any bullish movement will be limited to, in the best to best case, will be limited to 5048 on this was on February 12th at 10:30 a.m. Eastern time. Okay, so we knew that even if it try to move up, then maximum it can move up to 5048. Okay, this means that this 5048 is the all-time high level, ATH all-time high, as well as my calculated resistance level. That is why it is very heavy and very important, right? This means that any more bullish movement in the S&P 500 will be limited to, will be restricted to what? 5048. Simple. Okay, and even if there comes heavy bullish movement somehow, okay, because this is all, because this is what, okay, this is an illogical movement. Okay, yes, the trend is bullish, no, okay, this is clear, but the CPI data, okay, and the whatever the data was there, or whatever the bad or the worst news, okay, recession or whatever was there, the stock market has simply neglected that news, right? So that is why if there comes any more bullish movement, it will be limited to 5048.39. Even if the S&P 500 manages to breach 5048.39, then it will have to close. It will have to close above 5048.39 so that it can open the chances for more bullish movement. This means that if the S&P 500 breaches the 5048.39 but fails to close above 5048.39, it comes down and it closes below 5048. In that case, it will not confirm any good bullish movement or any bullish movement or any further bullish movement at all. This will be seen as a rejection, right? In order to sustain bullish, it must move up and give a proper closing, not just one closing but two closings above the previous, the mark. That's it. If it manages to do so, in that case 5100 will be there in the picture. Okay, although there are some other resistance levels and the not support, but some resistance levels even before 5100, and the S&P 500 can give up heavily, okay, from these the levels. But whatever will happen, I will keep you posted through these the daily and the precise updates, and I will tell you that where we are expecting it to give up heavily if it try to move up, or if it is managed, or if it is able to sustain above 5048.39, right? Now, so this is in the bull side, okay, there is nothing as such, okay, only this thing. Now in the bearish side, okay, there will be no fall, okay, or any fall in the bearish side will be limited or very very limited, as long as S&P 500 is sustaining at or above 5000. Yes, there is one more thing. There was a very heavy support level around here, okay, this was very heavy support level, and the S&P 500 has lost the support level on Friday. Okay, it was trying to sustain and it was sustaining, it was very well sustaining, okay, at this the support, this is a heavy support level, but in last hour it failed. Okay, so this means that any more bullish movement, for any more bullish movement to happen, at first this particular support level, it must be this is now resistance, it must be breached, and the S&P 500 must sustain above this particular, okay, resistance level, which will then act as support. That is again the primary condition. Now yes, the bearish side, S&P 500, if it comes down and gives a closing, again closing is important. Whatever happens within the day, intraday, okay, it doesn't matter what is happening, what is not happening, but what will be the closing, it will define the what is going to happen in the S&P 500 next day, or in the coming day, or in the week or the month, right? So closing, if the S&P 500 gives up the 5000 as well as, okay, this little zone which is just okay, a little below this, the 5000, okay, then only it will be out of its comfort zone. As long as it is sustaining at or above 5000 or this zone, it is in its comfort zone, bullish, heavily bullish, no doubt. Okay, once it loses its comfort zone, then it will come down. Now any fall will be limited to there is a very heavy this the support level, or in simple terms you can say that there is this the moving average. Simple, this the moving average. This moving average is very critical for the S&P 500. If the S&P 500 comes down, gives up the moving average, gives a closing below the moving average, gives a closing below the moving average, first closing, okay, this indicates that it is now out of the comfort zone as well as it is weak. Then we will wait for what? We will wait for the second consecutive closing, the second successive closing. If that closing also happens below this the moving average, remember this is the moving average, every day its value will change, okay. So now if the S&P 500 gives up this the moving average, there comes a second consecutive closing below the moving average, that is the only and the only condition wherein we can say that there will be more fall, there will be heavy fall, it will come down, it will enter into the reversal, and so and so and so, right. This also means that as long as S&P 500 is sustaining above 5000 or this the small zone, or even after even if it gives up this the zone but it sustains above the moving average, it is good, it is good, not a problem, okay, because the moving average is also at or around, there is one more very heavy support level, okay. So the moving average and that support level are giving extremely heavy support to the S&P 500, and a closing below this support level and the moving average means the S&P 500 that the bearish pressure is so heavy that these support levels and the moving averages fail to give this kind of support to the market, okay. And if there comes the second closing, in that case it's clear that now it is going down, okay. Why the second closing is it is so important? So the second closing is important because if you notice this closing particularly, this was January 31st, okay, sorry, this was January 31st, okay. There was one closing below the moving average, okay. Then there came this the closing above all of the moving average, moved up. Then this particular candle it came down, okay, and then reversal, and it managed to just at the moving average, and then this, okay. So we have seen these two instances that it was there, right. So whenever it happens, this particular case happens, okay, means when there comes two consecutive closings below this the moving average, okay, the picture is very much clear. Now there's one more thing. If you notice, there were two consecutive closings here, okay. Then the next day on 5th of January, we have seen that S&P 500 struggled to move up, and the moving averages after 2 months, more than 2 months, were about to give a bearish crossover, okay. However, it failed because on 8th of January, Monday, there came an unexpected bullish movement, not bullish movement, but this was 100% purely manipulated movement, okay. On Monday there was no technical reason, nothing, no technical, no data, no information, no news, nothing was there, okay. But there came this the extremely heavy bullish movement. Because of this extremely heavy bullish movement, this crossover in the moving averages failed, rather it formed a slip. What? A slip. And if you have subscribed to my YouTube channel for last many months or years, then you know that whenever there comes a slip, then that movement continues, okay. Then again a single closing below the moving average, second closing above the moving average, single below, then single below, and then that is why two consecutive closings below the moving average, we need to confirm that this is happening. And if there comes two consecutive closings below, and also somehow if there comes a crossover, then it is confirmed that now it is going to enter into the short-term bearish reversal. I will not say long-term bearish reversal, short-term bearish reversal, okay. Because there are some more conditions, okay, which are required for the long-term bearish reversal, okay. Short-term bearish reversal for now, it means 4818, okay, as of now. So as of now, whenever it comes down, 4818, just remember this thing, 4818, it was the previous all-time high, and there is one more heavy support level, okay. There is a good zone, 4790. So 4790 to 4818, very heavy support zone. This is where it is actually going to find some good support. Okay, not above, okay, this particular thing. This thing is clear. Now there is one more thing. This is with the MACD. MACD, if you notice, 22nd of January, it changed from bearish to bullish, then it formed a slip, again bullish, then on 14th of February, bearish, 15th of February, bullish, and then finally on 16th of February, bearish. Now the MACD is bearish. All we need to wait for is to see when this stochastic RSI goes bearish. When the stochastic RSI will go bearish, and when the MACD and the stochastic RSI will align bearish, then this will confirm that any more bullish movement, any more upward movement will be very limited, very limited, and any bullish movement will act as an opportunity to go bearish. Just like any bearish movement act as an opportunity to go bullish. Okay, in this particular case, no, I will not say that it is an opportunity to go bullish, because it is heavily saturated, heavily overbought, and we do not know when it is going to give up. But what we know is that whenever it is going to give up, it will give up heavily. Okay, so yes, any reversal or any bullish or any upward movement will act as an opportunity to go bearish. Okay, when this particular condition is seen, when this happens here, and when the same happens in the Dow Jones, when the stochastic RSI of the Dow Jones aligns bearish, when Dow Jones is bearish and S&P 500 is bearish. Bearish means stochastic RSI and the MACD. When these two are bearish, in that case we will see that the entire market is struggling to move up, rather it is giving up, heavily, or the heavy candles, right? But still there will be no heavy fall, no good fall, until and unless there comes 2 consecutive closings below the moving average. This is very much clear. And those who thinks that I only use the levels and nothing else, then no, I use the levels as well as the technicals, as well as these, okay, all of these are values of the technicals, and then only, okay, after combining the values of the levels, okay, these are technicals, okay, I am able to give you these kind of predictions, okay, which are very accurate to the movement of the stock market, or to the S&P 500. Anyways, so 21st FOMC, okay, 22nd or 21st evening Nvidia, and 22nd morning Nvidia. Okay, 21st second half and 22nd first half, these are expected to be heavily volatile. Okay, or very volatile or heavily volatile. Whatever will happen, whatever will be the interpretation of these, the minutes of the meetings, the SEPs, the projections, okay, and earnings and all, I will keep you posted through these, the daily and the precise updates of the S&P 500 to my Patreon community members. And if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. You can join my Patreon community. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And if you have liked this video, then hit like. And if you have any questions that you want to ask, then please feel free to ask your questions through the comment section. And guys, this was my S&P 500 weekly technical analysis for the week of February 20th. This means from February 20th, which is Tuesday, to February 23rd, that will be Friday.